Hello, Cryptopians. In this video, we have special guest, TraderUnknown. I know this video goes back a few months, but after watching this old recording, I've decided to pick out some of the golden nuggets I found and share them with you guys. Hope you enjoy.
And sometimes, sometimes B can go higher and fake a lot of people out. What you really want to see on this, if B extends above R5 and it's made on, really low volume, especially the volume compared to the top of our previous high here, that's something that I look for to be really skeptical about. Be very cautious if you're making new highs on lower volume, especially, but, that lower volume will kind of show up as negative MACD divergence at the same time. But volume is really your main indicator, because when you have higher prices being made on less market activity, right, that's less consensus, that's less transactions happening. It's less consensus, right? It's less momentum going into those higher prices. So that could be a simple sign of just, market exhaustion. And I've seen this many times where a B wave will kind of go over the previous high on lower volume, suck some people in, and just crush their hopes and dreams as a C wave down unfolds, because the pessimistic wave is just not quite filled out yet. One, two, top of three. It's going to pull back in another four, and then another fifth wave higher. So these 1-2 patterns, when you get a completed 5 up, 3 down, especially on the daily chart with good volume, these 1-2 patterns are great. We're close enough to the bottom of 2 where you can buy it here, maybe suffer a little bit through a micro 4-wave pullback, but we're going to get the rest of primary 3, 4, 5, and you're just going to float down that lazy river. I'm all about floating down the lazy river. This is the daily chart. This would be a multi-day to multi-week hold for me. I do currently have some in this market. I generally trade in the direction of the daily charts. I usually anchor all of my analysis on the daily charts and try and trade in that trend.
So one question in the Twitch chat is, can you talk more about the MACD and how do you apply it to this?
The MACD is more of a confirming indicator. You really don't need the MACD. As you've noticed, I don't even have it on the charts here. So let's bring it up and just take a look at some ways I would use the MACD, I guess.
Could you look at Ethereum?
Oh, I think you can just double click in the middle and it's already at the bottom. You just double click in the middle of the chart. This is a different login, sadly. Yeah, sorry about that. Just double click in the middle of the chart and it should bring up the bottom 2 indicators.
All right, someone wants to look at Ethereum. So, for the MACD, there's nothing I can really show you here. The MACD is moving up, bull market. Our 1-2 pattern on increased volume and declining volume is more important. The price, volume, then your indicators. That's the order of importance in terms of analyzing the markets. Simple. So when you've got a downtrending market, like this is a downtrending market. It's going down. You've got lower highs, lower lows, right? Stair step of lower highs, lower lows. Here we go, lower highs, lower lows, lower highs, lower lows. And we get a little bit of a peak here, but still lower highs from even way back here. So it's still downtrending market. Now, look how the price down here made a lower low in the price chart, but MACD made it just a slightly higher high. I know it's not really there, but it's slightly there. So let's grab our trend line and look at that. So we grab the previous bottom of the MACD zone, and it's just ever so slightly higher. So just a little bit of positive divergence there. So you see you have the bottoming of this MACD zone on the line here, but where it scoops is just ever so slightly higher than the lows made back here. So that is a positive divergence, ever so slightly, although it may be, but what that kind of is signaling is that there is an exhaustion of selling momentum coming into this market as you make lower lows in price but higher lows in MACD. Generally, that's what, again, if anyone saw my trading plan earlier, if I'm trying to buy a downtrending market on the daily chart, I have to see those lower lows in price made on higher positive MACD divergence before I get interested. But you could have looked at this market, seen that divergence, and guess what? You've got a little nano 1-2 here, that you could have used to get long and keep your risk very minimal. If you get long right here in this zone or a little 1-2, you can take your stop loss right here, 80% of the one, or even below the low, just for even more safety. But that could have gotten you aboard this reversal, which is now looking like a full 5 up. Looks like we're probably going to run into previous resistance here, build out a cup, and I would not be surprised if our handle is our 3-wave corrective. So let's just go ahead and build out the wave count after the traditional technical analysis that I just did. Does anyone have any questions so far?
I have a question specifically for this chart.
Okay.
So you were saying that even though there was a lower low where your zero is at right now,
Correct.
the MACD divergence was slightly higher. That blue line was slightly higher than it was, let's say, in November. Is that correct? Is that what you were saying?
Yeah. So and I can find you a better example of this. This is not the best example, but it's actually, it's there. It's ever so slightly sloped up, and I can show you a reversal pattern in ZRX in a minute here, because it's got a better divergence that we can look at.
Okay, and the whole idea is that that's suggesting that the momentum's changing into a more of a oversold.
What it really says is there's less selling momentum at lower prices, right? So less sellers at a lower price means the sellers are kind of drying up. What's really happening in the auction process is when a market is moving down, the auction process is basically looking for buyers, right? And the same thing when the auction process is moving up, it's really looking for sellers, right? Because you've got bidders bidding up the price, trying to match sellers, and the actual market movement of that market going up is a market that's looking for sellers. And so combining that with when you really think about how the auction process works, and the volume combines with that just natural market process, when you've got less momentum going into lower prices or less momentum going into higher prices on the flip side, it's just saying that there's less momentum in there, and it could be, not always, but it could be a signal of maybe some exhaustion, or maybe the market's ready to shift trends. But again, on a downtrend, I'm not interested in buying catching a falling knife. I want to look for evidence that selling exhaustion is meeting its end, and that the market is ready to shift its trend. So if we get our 3-wave corrective move here, if anyone likes the cup and handle pattern, that's exactly what that would be, and then I would expect higher prices here. For me, it's tough to buy this. Maybe you could buy a breakout here on good volume. For me personally, I wouldn't buy this right now. I would wait for a defined retracement and get a better entry. So this one, the squeeze actually called this nice little 5-wave move here. We had a little 3-day squeeze here on a little 1-2, and sure enough, the squeeze fired long. Boom, boom, boom. So this is a good example of when the squeeze really does work out well. I've personally used the squeeze for many years. I know Mike likes to talk about the squeeze a lot. It can be very, very beneficial, but just my personal anecdote, in my experience with the squeeze, I never use it on anything lower than a daily chart. Simply because you'll get a lot more false signals anything lower, and you'll even get false signals on the daily chart, like here it didn't do anything, here it didn't do anything. But really, where I think the squeeze really, really shines is the weekly chart. And let's just see if the weekly chart showed anything with this squeeze. So it looks like all the way down, this market was squeezing, building that volatility pressure, that volatility compression. And so it's firing off a pretty massive weekly squeeze. But again, that's just another piece of evidence that we're in a bull market here. I already knew we were in a bull market by 5-up pattern. But again, let's go back to the daily chart and look at that positive MACD divergence, because it does show up very well in this chart. Let's see if we can get the MACD to work this time. Okay, this is a glaring example of positive MACD divergence. I will just point this out so you guys can see it better. But you see we've got a downtrending market. The market's moving down, just general directions here. I like to paint my picture in broad strokes. I don't like to get too detailed. Hey, Mike, how do I make this thicker and just more noticeable?
Right click on it and go to format, and then there's a thickness slider.
Okay, thank you, sir. All right, we'll go with blue. I like blue. So we've got a downtrending market here. But look at what our MACD is telling us. If we just look at we're in the daily chart. If we just look at the MACD, well, look at that. We're uptrending, right? And we're making lower lows in the price chart, but higher lows on the MACD. The MACD is uptrending. And then what do we see? We see an increase in volume coming into the market. We've got our first little impulse of 1, 2, 3, 4, 5. We've now got a completed 5-wave move up. You could have gotten long right here at the bottom of this 1, 2 with our stop below the start of wave 1 for a reversal. You want to give it a little bit more room just in case there's a little fake out. But this market, never even tempted it. So we can do a 3, 4 there, top of 5 here. Got a completed 5-wave move now, bullish market. That's clearly an impulsive move. We got volume, we've got a 5-wave move. I can't buy it here. We would need to wait for a 3-wave retrace. Let's say that's market's made its 5-wave move. We retrace to maybe about here, and that would be our entry on C. Would be amazing. I will keep track of this market and announce it when I strike in this market.
So if the negative waves, like the one from 1 to 2 or the one from 3 to 4, if they are smaller, does that show that the next leg up is going to be a bigger move or something like that? Is there something of that sort?
I wouldn't get hung up on something like that. Just look for a general 5-wave move with just try and identify your impulsive waves, right? The impulsive waves, stick out like a sore thumb, right? Like this whole move, that is not pessimistic. Would you agree?
Yeah, I agree with that. That's what I'm saying. So if it's lower this thing, that means that there is still interest in this, and there's a lot of volume down below. So apparently the next leg is going to be higher, right?
Absolutely. Well, when you make a 5-wave move and then a 3-wave retrace, that just is basically your signal of you're in a larger degree 1, 2, right? So 1, 2, 3, 4, 5. Elliott Wave is fractal in nature, guys. No matter what time frame you're looking at, you're going to find these kind of same basic principles. But it gets harder as you zoom in, it gets harder. A lot of traders, they get lost in the forest for the trees. And I used to be that kind of guy. I used to be the guy that was buying at the top of a 5-wave move and selling at the bottom of a retrace and not understanding what the hell just happened, not understanding what the markets were showing me, what the markets were telling me. I was chasing highs and, panic selling on lows and just not, I've made every mistake in the book. I've seen it all, done it all. So again, a lot of traders get lost in the forest for the trees, going in way too micro and trying to nitpick over every little thing. Meanwhile, I nowadays I avoid the forest entirely, and I float down by the lazy river by sizing up the larger trend, finding a ideal risk reward entry, at the bottom of a 2 here if you're lucky, or wait for the 5-wave move and the 3-wave retrace and then buy here at the bottom of the larger 1, 2. And then I get my scale targets. As soon as I get my first 100% scale out target, it becomes a free asset, and then I can just float down the river as long as it is and go wherever it takes me.
Okay, and one last question on this. What if we still keep getting in good buying volume on this and it still keeps moving up? Should we be worried about that, or we should still wait for the retracement for buying in?
Okay, yeah, great question, because that's, that can happen, right? Like, what if this is not the top of wave 5, right? What if wave 5 just does something like this, right? What if wave 5 just goes bonanzas? And it could. I mean, it absolutely could. The problem I have is I have no way of knowing how to play that. I mean, you could, buy a high volume breakout, and if it goes up there, well, great, all the power to you. Me personally, that's not something that I try and chase, because I have no idea how high it's going to go or how low it's going to go. When you buy right here, expecting a breakout, if you think it's going to do that, well, what if it doesn't do that, right? What if this is the top of 5 and it does retrace and it crushes your dreams? I just don't have any way of buying right here, because it's the top of what looks like a 5-wave move to me, and I don't know. I don't have a rule set that's good enough that tells me what to do, to manage my risk, right? Because I'm not trying to predict the markets. I'm not trying to expect anything of the markets. That's that kind of mindsets that kind of can really hold you back, as a trader. I try and just identify money flow dynamics, see what the market's doing. There's certain areas where I'll be interested in a market. But as far as, your question, what if wave 5 goes bonanzas? And it could. I just don't know how to trade that personally. Um, to me, that's chasing a market, and that's putting a lot of risk in my own hands, because I could be buying a top and I don't, I wouldn't even know it. So what I do know, though, is I know markets won't go up forever. They just can't. It's not realistic. I like to be pretty realistic in my thinking and in my trading. So what I do know is I know how to buy a 3-wave retrace, and so that's what I wait for. I don't chase something that I feel like I'm going to miss out on something, because I touched on this last night, but there are endless opportunities in the market to make money. There are also endless opportunities in the market to lose money. So I want everyone to kind of think about that, to kind of help put you in the cool hand Luke mindset, where you almost want to become detached from your investments, and just kind of be objective about it. Don't, the idea of trying to count Elliott waves is to really objectively identify the optimism and pessimism, and really not to participate in it, because ultimately it's going to skew my own analysis if I start to participate within that optimism and pessimism, greed and fear mind complex. A lot of this game is psychological, and there are some books that I can recommend to help people get in that psychological mindset of, what it takes to be successful in these markets. As tiny as that is, that's still an impulse. I mean, went from a dollar to what, $1,200 on that first move, guys. I mean, that's a hell of a market, dude. I mean, traditional markets aren't going from $0 to $200. Or $1,200. That's an impulse. So we're gonna call that our 1-2. Oops, I grabbed the wrong tool. So I'm absolutely confident that that's a 1-2. So no matter what this market does, guys, it's ultimately headed for much, much higher prices. And we can, let's say, if the top of primary 3 is in, let's just project. Well, actually, I can't. I don't have the bottom of 4 yet. Okay, scratch that. Regardless of what the market does in the immediate term, and I mean immediate term by over the next couple weeks to a few months, this market is headed much, much higher over the next 6 to 12 months.
Thank you. Yes, very much so.
Best education I've received in a long time.
Thank you very kindly.
My pleasure, guys. My pleasure.
How do you take profits?
For me, I use a very simple rule, because it's been working so far. Every time I get a 100% gain on a position, I reduce that position by 50% and take my initial risk, my initial investment, and get my money back. From there, if it doubles again to 300% gain, then I take another 50% of that position out, and I doubled my investment, and now I'm left with 25% of my initial position, and I hold that forever. But if I use that method, I can build out a portfolio of assets, a portfolio of lottery tickets, and maybe one or two of them goes bonkers and I hit the jackpot. But for me to hold for those 10, 20, 30, 40, possible 100 baggers, that's the only way that makes sense for me personally in terms of managing an exit and just trying to stay in that lazy river.
So if it goes up 50% and then it returns to your entry level and it pulls back more and you get a stop out, so you then take profit at 50% and now you're out of the position at a loss?
If I don't get 100% and it goes, so say the market takes off and maybe I get to like 90% and it doesn't quite make it to 100%. If it goes back down to my initial entry, then you reevaluate, right? You reevaluate what the market's doing. If if it goes up and then immediately, comes back down to your entry, you kind of got to take a look and see what's going on. If it still looks okay, because this has happened to me a couple times already, where I just barely didn't get my 100% profit and trigger my sell order that was in the market, and it's come back down to my entry. If it looks okay, then I'll just continue holding for the, if the trend looks like it's not breaking down and it looks fine, and looks like it's still in a bull market, and I will hold for that 100% gain because I stay objective about it. I stay unemotional about it, and I try and stay objective as possible.
So, a quick question from Twitch chat. He asked him if he increases his position on coins after he's free rolling at other good entry points.
That is a really good question. You absolutely can do that. I haven't done that yet, but I may consider doing that if I see some really nice larger degree 3-4s, right? Because that means I've missed the 1-2, better entry point at even lower, and I missed the 1-2, but I see a nice 3-4, but as far as adding, me personally, I'm not doing that right now. I don't see anything wrong with that as far as adding into your positions at a higher price in a bullish market, especially if you are scaling in your entries in 2 or 3 tranches, and you only fill one tranche and the market's taken off without you, and you see a nice little micro 5 up 3 down, a smaller degree 1-2, and you want to add in another tranche a little bit higher. I don't see any problem with that.
So the 100% thing, that means you don't trade too often then.
I don't. I didn't make a single trade today. I'm fully allocated. I'm waiting in the weeds to hit my targets or stop out of a position.
So how often would you make a trade? Like once a week or like once every 2 weeks?
It just depends on where those opportunities are. I'm constantly scouting the market, looking at charts, waiting for markets to come to me. Right now I'm fully allocated, so I'm kind of just waiting for some scale out targets to hit before I can reallocate somewhere else, or that kind of thing. I'm very slow. I've tried the whole day trading thing. I've tried the micro time frame trade. Me personally, it's not for me. If you guys out there that are doing it, if it's working for you, if you like it, great, more power to you. I'm not going to poo-poo on anybody's strategy. For me personally, lower time frame trading not only was very difficult, but it also stressed me out to the point where I would make bad decisions. And so for me personally, I do not do that anymore. Once I get my first 100% target, which is happening, so far I've gotten it every time, it becomes a free asset. And if I'm left at the end of the year with 50 assets that I built out for free, nothing wrong with that.
Okay. Cool, thanks.
Sorry.
No, I mean that's how I look at it, right? I mean, I'm building a war chest of lotto tickets, right? If I can get my first scale out target on any trade I make, that becomes a free asset that gets locked away into my war chest. that becomes a lottery ticket, because, you know, what if it does go 10x, 20x, 30 bagger? The only realistic way for me to, you know, because I'm not going to know which ones are going to do that, but I guarantee you there might be one or two or a couple here there that do that based on what I'm seeing in this market so far. So it's unrealistic for me to know which ones, you know, that will happen to. So the way for me to eliminate that, you know, that non-possibility is to make it a possibility for me. And to make it a possibility, I'm building out that war chest of free assets by taking my money back at 100% gain, and then from there taking another 50% at 300%, and then keeping that asset as a lottery ticket forever.
One of the hot topics as of late has been the newly added APBC. There's barely even a daily on it. I've seen so many requests when I've been on here with Twitch chat. How would you approach something like APBC?
Okay, wow. I don't know whose chart this is, but he's got the right idea. This does look like a 1, 2, 3, 4, 5 to me. They're at the beginning of your wave 3, 1, 2. But so with something so new, we're gonna have to zoom in a little bit. So let's go to the hourly and see if there's an initial 5 up, 3 down, up, and sure enough there is. And whoever charted it did a very good job. So we've got our 1, 2, 3, 4, 5 up, our little ABC down. And that was the start of the bullish move. But look, we've got an even smaller one. So for those of you who are quick, you know, who like to zoom in, who like to catch something when it just gets listed, let's go to the 5-minute. Well, I mean, I can see just this initial 1, 2, right? So you see, so look at this market. I know it's really hard to see, guys. I do apologize. So this market's selling off, the volume's declining, it's kind of settling down. Look what happens. So we're on the 5-minute chart. We're very micro here. Look what happens. So we've got an increase in volume followed by a decline in volume, and look what that looks like. 5, you know, I could probably zoom in on the micro on the 1 minute and probably find a 5-wave move in there, but that to me looks like a 1, 2. You can buy this even, you know, it did go a little bit probably below 80%, but not much. You could have, you know, when you're buying it like this low on such a micro scale, you can move your stop to below 100% of your wave 1, because you're gonna might need to give it a little bit more room, because whenever you zoom in, you're gonna get more fluctuations in price relative to the chart, right? When you zoom out, it's not going to happen so quickly, but when you're on a 5-minute chart, I mean, you could get massive fluctuations, you know, relative to the chart, because it's just such a small time frame. 5 minutes, so it's a little. All right, there we go. So yeah, so there's a little 1, 2 right around there on the 5-minute that you could have used to get long, and you really were never tested. And you know this. Oops, I think I just moved one of his fibs, but I concur with his analysis. This does look like a bull market to me. His counting is correct here. Here's our larger degree 1, 2, working in our third wave. You could absolutely buy here. We're close enough to the bottom of a 2, so you can buy here. It looks like his subwave counting is correct. Little 1, 2, 3, 4, 5 to finish 3, then primary 4 and primary 5. So yeah, you can buy this right here. But I'll be back, and maybe we can do some more charting.
All right, cool. Thanks.
Thank you, Trader.
Thank you guys so much for watching this video. I know it was a bit long, but I appreciate you staying till the end. Check out our Twitch channel. That's twitch.tv/Crypto World News, Twitter at CWN Productions, and Facebook at Crypto World News. Once again, thanks for watching. Hit that like button, share, follow, comment, all that goody stuff, and we'll see you around the corner.